Okay, so I want to talk today about chasing performance because we are getting some phone calls from some clients, and we're not surprised because over the last several months, there's a certain investment that's done quite well and it's going up, up, up. And the more something goes up, the more people talk about it, the more you hear news about it because it gets exciting. And so you feel like you're missing out and you need to participate in this. And once again, that investment happens to be gold or precious metals. And this isn't new because we've seen this a couple times before. In fact, let me show you this chart because we had clients talking about this investment going back to 2010 because coming out of the financial crisis and the scare and the fear and things that were happening, people decided they wanted to have something safe and they've perceived gold as safe. And the more people that buy any type of investment, the more the price will go up because if the price is going up, people want to hold on to that security, which means if they're going to sell it, they're going to want a higher price. And so the demand drives prices up. And yet coming into 2010, after everybody's talking about why they should have it, for the next 10 years, gold sold off. It basically corrected. And then what happened in 2020? It came back, and it came back in 2020 because of COVID and because people were scared and because all of a sudden there was a stimulus. And so people had more money to go put in some places, and gold was one of those places. And it traded off again a little bit. And here in the last few months, we're seeing gold spike again. Why is that? Well, there's uncertainty in elections. There's uncertainty with inflation. There's uncertainty with interest rates. There's uncertainty with wars. And so here again, we're starting to hear clients saying, should I own gold? And it's just like when something goes up 50% in a year, probably going and buying that is not a good idea because you might be just locking in someone else's gain. What we found is whether it's gold or oil or cryptocurrencies or real estate in the financial crisis or radios going back into the 20s or tulips going back into the 1600s, when everybody chases after something and runs that price up, locking in that price by buying high often ends up hurting you. And it ends up not being the safe investment that diversification can help prevent, that asset allocation can help prevent. And so what we encourage clients to do is not get caught up in the one thing that's doing really, really well in the moment, but trusting a plan, trusting a portfolio, and not chasing performance.